Welcome back to another episode of Tie 10. I am Courtney Brophy, and I help lead the insurance asset management business at Wellington Management. Today, I'm joined by Peggy Gartin, the current Chief Investment Officer of AAA, the Auto Club Group. Hello, Peggy.
Hey, Courtney. Thanks for having me.
Absolutely. Nice to see you. Now, I must tell you, I have been a AAA member for a very long time. Got my AAA membership when I first started driving. Actually, I think it was a requirement in my household that if you got your license, you were also added to the family's AAA plan. I think that somehow made my parents feel a little better about thinking about their teenage children behind the wheel of a car. But it's a membership that I've had ever since, and I get tremendous value out of.
That's awesome. Your parents raised you well. Fortunately, that has continued to endure, and people want to make sure their kids are a part of that. So thank you for being a member.
Absolutely. So let me give a couple of quick introductions for our audience members today. And for those of you who don't know, TIDE is the Investment Diversity Exchange, and its mission is to promote diversity and inclusion within the investment management industry. Through its flagship conference and activities just like this, TIDE brings together the best minds in the industry to build partnerships that heighten women and minorities' role as influencers in the industry. And one of those best minds is joining us today. We have Peggy here. I mentioned that Peggy is currently the CIO of the Auto Club Group. Prior to that, she held roles at Allstate and Blue Cross Blue Shield Association. She has also worked on the asset management side of the business, holding roles at Deutsche Asset Management, BlackRock, and even my own firm, Wellington Management. So, Peggy, let's start by getting to know the Auto Club Group.
Sure. Well, yes, I have worked for many different types of organizations. The Auto Club Group is definitely unique among those. We have 60 million members of AAA worldwide, and the Auto Club Group accounts for about 25% of that. And while most people do get to know AAA by virtue of emergency roadside service, there's a lot more to us than that. We're in the banking space, certainly in the travel space. We have a significant travel business. Going way back, your parents may have ordered a triptych from AAA, and you would have gotten a very large volume of paperwork to take on your road trip with you. These days, it's a bit more modern than that with digital capabilities, but that's still a function that we provide. And then, of course, we're in the insurance space, which is a very big part of our business as well.
Absolutely. And so you have members worldwide. About how many members do you have?
60 million worldwide, close to 15 million of those are part of the Auto Club Group here in the U.S.
Now, let's talk a little more about the investment portfolio. Can you tell me what that looks like?
Yes. So we ended the year 2020 enterprise-wide with an investment portfolio of about $7.5 billion. A big portion of that is the general account of our insurance business, but there are, certainly many other business lines represented there as well. We have 8 members of our investment team, and oddly enough, I have not yet met any of them in person because I joined the company in March of last year after the COVID situation had already started and everyone had gone home to work remotely. So that's been, a really interesting way to get started and to get to know the organization. But I'm really excited about what we managed to accomplish in 2020. My team came on very strong, and I attribute our success in 2020 to their enthusiastic commitment to the organization. And so we're off to a good start.
Certainly an interesting time to start a new role. And
right.
An interesting time to be investing in markets. 2020 was certainly a wild ride in markets. So could you tell us a little bit about any allocation shifts that might have occurred or anything that you might be evaluating now?
Well, we didn't make significant shifts in 2020, but the company did shift their investment strategy quite significantly over the past few years. And so we managed to continue to implement those changes over the course of the year. And that shift really is primarily around the notion of creating a more diverse and resilient portfolio for the long term. Historically, I would say we've been quite conservative. We've had a very high quality bond portfolio and, a little bit of equity and some other things sprinkled in here and there. But we're making a significant shift to more of a total return strategy, very expansive list of asset classes that we're going to be investing in. We've certainly already started down that path. And so it's a very different portfolio that is designed to serve the needs of the organization over the long run, as opposed to just generating income.
Yeah, that's really interesting. Let's shift the conversation to the topic of diversity. I know that's something that this audience would love to hear your thoughts on. Your philosophy. I'd also love to hear about your diversity goals. So tell us a bit more about that.
Well, one thing that I will say was that I was quite pleased when I joined the Auto Club group to see the level of diversity that we have in our senior executive ranks. It is a diverse organization, and I'm excited to be able to be a part of that. One of our strategic initiatives is diversity and inclusion and improving that. From an investment perspective, a very high priority that we have is to expand our relationships with diverse managers. And I think that's really important for a number of reasons. Of course, it's the right thing to do, and we want to do our part to improve opportunities for minority managers and other diverse people in our industry. But there's also a growing body of data, and we believe strongly in this, that diversity among the ranks of our managers will improve our results in the long run. So we're really focused on it for that reason as well. But we do feel like we have to broaden the definition of diversity. When I think back earlier in my career, when people talked about diversity within our industry, the focus was on asset managers whose ownership was at least 51% by a minority. And that is really not a great definition from our view. It just doesn't cast a wide enough net to be able to make sure that we find opportunity to expand that. So we are looking at different ways to define diversity in terms of the managers that we're working with. Our consultant NEPC has done a lot of work in that regard, and they've been helpful to us as well. Now, of course, the organization does have a very formal supplier diversity program and policy, that we follow with vendors that we're engaging with. But I think you would probably agree that when you're underwriting an asset manager and doing your due diligence, that framework isn't exactly a good fit for the asset management space. So, we want to think about it from some different perspectives. We want to see a clear commitment from the managers that we're working with, even if they don't fit the definitions we're creating of diversity as an asset management firm. We do want to see a commitment from managers in terms of what they're doing within their own ranks to improve diversity. We want to see whether or not they're committed to helping increase opportunity for diverse populations within the investment industry. And then, of course, there's, what they're doing within their own communities where their employees work and live to improve inequality and give some opportunity there as well. So it's really about understanding who we're working with. It's kind of our version of the know your customer approach. So we think it's really important to dig into that type of detail to understand who we're partnering with.
Yeah, that's a really interesting point you make about broadening the definition of diversity. And I can say from Wellington's standpoint, we've really seen this groundswell of demand for greater transparency of data around diversity statistics for asset managers. The goal being exactly what you mentioned, to broaden that definition of diversity beyond just firm ownership, which is a really important thing to measure, but there's so many additional metrics that can supplement that data to provide a more complete picture of the firm's diversity and inclusion efforts. And that data push, we're seeing it externally from clients and consultants and so many other constituents, but we're also seeing it internally here at Wellington. We've been on a multi-year journey to make sure that we have the right data so we can see how we're doing as a firm. And we've launched what we call a Count Me In campaign that gave employees the option of self-identifying across both visible and less visible aspects of diversity. And with this better data, we can really see now what our strengths are as an organization and where we need to improve. So there's an element of diversity and inclusion that we can examine through these quantitative metrics, but I think there's also this qualitative component. I think this is another really important consideration when analyzing the diversity and inclusion efforts of asset managers, because it's one thing to have diverse talent at your firm, but it's another thing to make sure that diverse talent is engaged and feels a sense of belonging at the firm.
Yeah, absolutely.
So yeah, we really want to make sure that our diverse talent feels like they can show up and be their authentic selves and be able to perform at their highest level possible. Absolutely. So the way that we've approached that at Wellington is we've performed some engagement surveys to see how we're doing as an indicator of that measure. We've also tried to really build out our training efforts, as well as our mentorship, sponsorship, and advocacy initiatives to really help support our diverse talent. I'll give you just one brief example of something that's come out of that work. It's a program that we call Groundbreakers Academy. It's an early career development program for underrepresented talent at the firm. It's a great program, but I think what really makes it so powerful and unique is that it includes managers of those early career employees. So we're able to educate and build capabilities on two fronts.
That's great. I think that's a great idea. Another thing that I recall from my days at Wellington, and this is going back a ways, I was involved in the Wellington Foundation. And at that point in time, I believe that the goal was to improve educational opportunities for underserved youths. And I'm just curious to know how that has evolved over time, if that's still in place.
Yeah, thanks for mentioning that. The foundation is something that I've had the great benefit of being really involved with. And it is an employee-led and an employee-driven foundation. So I, as well as many of my colleagues from across our firm, have had the opportunity to build such great relationships with many of the organizations that we support through the foundation. So the mission is just what you mentioned. It's to support programs and organizations that improve educational opportunities for youth of traditionally underserved and economically challenged communities. And we do that through our annual grant making programs. So in 2020, we awarded grants to 79 different organizations.
Wow.
You had asked about what changed, and in 2020, we recognized that it was such an unprecedented year. So we responded with several additional programs to help support those in need during the COVID-19 pandemic, as well as organizations that were working towards racial equity and social justice. So we offered emergency grants to 100 granting organizations. We donated to 13 essential charities that were on the front lines of the COVID-19 pandemic, and we committed funds to frontline organizations that were focused on racial justice.
That's great. AAA has definitely stepped up in 2020 in terms of some community initiatives that has a long history as well, and in terms of promoting diversity. if you think about the different businesses that we're in, we operate in a lot of different communities across the country. And so there's diverse membership. We have diverse communities. We have a diverse range of employees. So it's kind of part of our DNA. Now is the time to increase those efforts even more. And Wellington admirably had focused their foundation on that many, many years ago.
Yeah, absolutely. Taking this topic of diversity back to the investment side of things, and going back to the topic of broadening that definition of diversity, has the Auto Club Group been successful in finding opportunities to use that broader view?
We have actually, in my short 9 months here, we've had quite a few opportunities. So a couple of examples in the public space. In the fourth quarter, we restructured our public equity strategy, trying to position ourselves for, the new environment, the new world going forward, and some economic expectations that we have in place. And through the course of that process, we added 2 new diversity managers. These were managers that, going through our due diligence process, ended up at the top of our list, not because of their diversity, but because of their strategy, their process, and their track record. But I was very excited that 2 of those managers have very strong representation of women in their both in their ownership and their leadership. Neither of them would have qualified if we stuck with the traditional definition of 51% ownership, but they definitely fit the broader definition of a diverse firm. So I'm excited about that. And then in the private space, we have found quite a few opportunities there as well. And one that we're really excited about, our most recent commitment, is to the Green Spring Diversity Fund. And that's a new fund that is being raised. And they will be making commitments to US-based venture capital funds that have diverse management. And so I love that concept. It fits really well with what we would like to do in terms of helping the initiative in the investment space. It's great because we were already working with Green Spring on another fund, and they've got a great track record, and they actually have data that shows their successful record working with diverse managers. So they come to this new fund with a great background there. And we like the concept, obviously, for investment purposes, but also for the purpose of developing relationships with diverse managers for the future and of getting to know them just as they're starting to come onto the scene. So we're really excited about that.
That's great. And I feel like there's been a lot of great momentum in the market on building these diversity-focused investment strategies. And at Wellington, we've been also working on a diverse founders fund that we hope to launch soon.
Great.
So let's shift gears again, talk a little bit about risk. And to be a good investor, of course, we need to be able to balance risk and return. So tell me a little bit about your philosophy on risk.
Well, I think of myself as a risk-averse person. So it takes a lot for me to get comfortable going into a new space and understanding.
The insurance asset management business, so that's a problem.
Exactly. Yeah. I come from a bond market upbringing, and I'm in the insurance space, so I am risk averse. Yep. Maybe I was made for this, I don't know. But I'm also an analyst at heart, so I think I tap into that analyst side of things in order to get comfortable. While I'm not the one doing the work on the different deals that we're looking at these days, I've got a team that's well qualified, and they do a great job of educating me and helping me to understand the different strategies that they're looking at. And I ask enough questions and get into the weeds enough to get comfortable with what we're doing. But I've also learned over time the importance of pulling back and thinking of it and from a bigger perspective, a higher level, and how does this particular strategy fit into what we're trying to achieve for the organization overall. So I think that's really the key for me, not focusing too much on one specific aspect of risk within a given strategy, but thinking more about what we're trying to accomplish for the company and what our long-term goals are, and whether or not this particular risk profile is going to help us with those goals. And it takes you away from just thinking about whether or not we're going to beat a market benchmark. So of course we want, we need benchmarks. We want to beat those benchmarks. But at the end of the day, the most important thing is accomplishing what we need to for the organization and growing capital and making sure that we're providing what the company needs for the long run in terms of their new initiatives. So that taking that approach helps me to take a much longer term view, not focus too much on day-to-day risk and market volatility. And I think that helps me sleep at night.
That seems like a good way to approach it, especially if you're naturally risk adverse and
right.
In that context. Yeah. You say you're risk adverse, but I look at your career, you have taken some career risks. And I have provided a bit of background in your career at the start, but tell me a little more about your career journey and any lessons that you may have learned along the way.
Well, I have not necessarily followed what some might think of as the traditional path from a career perspective. I spent many years working for great asset managers such as Wellington. And so obviously, from a portfolio management perspective, have a great appreciation for everything that goes into what you do for your clients and the importance of that. But I've collectively been in a lot of different environments and different cultures. And I feel like from a personal perspective, that has helped me build resilience over time and also learn to be flexible and figure out how I can be successful in many different environments. So I've probably seen a little bit more than, some folks who may stay, with one or two organizations throughout their career. But my experience does combine the asset management perspective with the asset owner perspective. And I feel like having that well-rounded view is what has helped me end up in the type of position that I am now. And it really does help me to understand the full picture of what needs to happen here. One thing that I learned in the different organizations that I've been in is that I really like being in a position where I can see a clear connection between the work that I'm doing and what it helps the company do, and how it fits into the organization. And for me, like the role that I'm in now is an example of where I feel like there's a very clear connection and I feel like I can have an impact. So for me, that was important. And I think it's important for people to think about that and whether or not where they're currently sitting fits in with their big picture view of what they want to do with their careers.
Yeah, I think that's a great point. I think that parallels so nicely too with the core tenets and beliefs that we have here at Wellington. We always like to say that investment excellence is our true north, and delivering that for our clients is our true north. So if we're able to fulfill that mission, we can literally help tens of millions of beneficiaries, whether those beneficiaries are trying to save for retirement or earning a scholarship to university or seeking care at a hospital. But really tying our work back to those real world outcomes is what makes the job so fulfilling and is what drives us.
Absolutely. I couldn't agree more.
But having all of these diverse perspectives from the different roles that you've had over time, it's such a powerful thing, and I'm sure has provided some great benefits for you and your organization. Do you have any examples of kind of tangible benefits that you've seen as a result of that?
Well, I think there's kind of two different aspects of that. One is having worked on your side of the business and worked for, great asset managers that have all kinds of resources that they bring to the table, I know that there's an opportunity to leverage all of those resources that are available. And we're a small organization from an investment perspective. We're not going to build out, some of the capabilities that a large asset manager has. So my job is to make sure that we're leveraging what people like yourself bring to the table. And I clearly have a good understanding of the resources that are available. So I have to bring that to bear for the Auto Club group. And, we're already off to a good start on that. The other part of it is kind of the flip side. I know, having been an asset manager, how different clients approach their relationships with asset managers. And I think it's important that we are a good partner with the asset management industry. I think we want to build long-term relationships. And, we certainly don't want to be switching managers in every strategy every year or every couple of years. We want to have a long-term view. And part of making it successful as far as a relationship goes is that we are a good partner to you, as well as the asset managers working hard to do well for us.
Let's close out today's discussion. You've given us so many great perspectives on your career, on your philosophy, on risk management, on investing, on diversity. So I would love to get to know you on a bit more a personal level. And we're recording this. It's early January 2021 now. The holiday season just passed. It was a bit of a different holiday season than many of us have been used to. But I was wondering if there are any highlights for you and your family from this holiday season.
Well, it definitely was different. We haven't been able to take part of some of the things that we normally might, but it was actually a good experience overall. We had a conversation around our Christmas dinner table about the best and the worst of 2020. And it was interesting because everyone wanted to focus on the good aspects. So that was a nice way to think about it, because it, certainly from time to time was quite easy to focus on the negatives for last year.
Absolutely. That's a great way to think about it. Focusing on the good. We certainly need to do that now more than ever. So given that, can you give me one of your favorite memories from 2020?
Well, I had the good fortune, and I don't know why it ended up this way, but my husband and I took a great vacation in early 2020. We went to New Zealand. So it was great timing and really a fabulous experience. So I highly recommend it. But of course, ending up in the role that I did in the midst of all the craziness of last year is certainly a highlight. And I feel very fortunate to have been able to end up at the Auto Club Group.
All right, we are nearing the end of our time here. So Peggy, could you leave us with any bit of advice for the next generation?
I would recommend that people focus on making sure that their voice is heard. And if it's not being heard, look at yourself, look at whether or not there are things that you need to change in order to show up better, show up in a different way in terms of what you bring to the organization. But if you continue to find that your voice is not heard or not respected, or that diverse opinions are not welcome in your organization, don't be afraid to make a change. You need to be in a spot where you feel like you can make a difference there.
That is certainly a great piece of advice. So thank you so much, Peggy, for joining us today for this engaging and enlightening conversation. And both Tide and Wellington look forward to collaborating with you and AAA, the Auto Club Group, in the future.
Thanks for having me, Courtney.